Hey guys, FutureMeDead here. I wanted to do a quick and dirty video on my thought process whenever I pull up a chart. This is my Forex platform. I use the Forex Trader Pro from Forex.com. It's not the greatest, but it's enough for what I do, and certainly has all the tools that I've come to rely on. Even though this is a currency exchange, what I'm going to show you, basically, my thought process doesn't change whether I'm trading futures or the OTC. So, diving right in, we're looking at a daily candlestick chart of the euro dollar. First thing that jumps out, obviously, is this pretty nasty decline. We're looking at 1,500 pips, give or take, persistently to the downside. The next thing that jumps out at me is the fact that we've gotten a pretty healthy bounce. This is a 400 pip bounce. For those of you who don't trade Forex, with specifically to this currency pair, 1 pip, which is the third and fourth integer here after the period, represents $1 in price, in profit or loss, based on one mini lot. What that means, it's a mini lot represents a small contract of $10,000, short or long. I'm not going to get into exactly the details as to how to trade Forex. You guys can look that up on your own time. But needless to say, this is a very healthy bounce. So the first important question that comes to mind is, well, is this, has this reached the bottom? Is this a major bottom? Is this something we want to be buying on a retracement, maybe now? Or is this something we want to let it be patient, let it play out, and reshort it because it's possible that this is just a break, a pause in the trend, in the persistent trend that is down. So that's what I want to go ahead and look into. So I'm going to go ahead and zoom in and look at price structure. That's the next thing that I do. So let's go to a 4-hour chart. Oh, I can zoom in a little more. Let's go to a 2-hour chart. And you guys know, and I say this over and over again, it's a broken record at this point. If a reversal is at hand and the trend has turned from down to up, well, the price pattern needs to exhibit 5 waves to the upside. It needs to be an impulsive pattern. From this low here to this very top, clearly, without a shadow of a doubt, it is a 3-wave move. You have a sharp move up, sideways price action for a few days, third final move up. So I'm going to go ahead and label this as an A, B, C. It's actually a little more complex. This is the correct way to count. This would be, this is a 2 sets of 3s with an intervening wave. So this would be a W, X, Y. Either way, it doesn't matter. That's just me getting a little too technical. This is a 3-wave correction without a shadow of a doubt. So this is enough for me, but let's go ahead and add a little more conviction to that bias. So what I'm looking for is a very common relationship between waves. If this is wave A and this is wave B and this is wave C, a common relationship is wave C tends to be equal the first leg, wave A, in price. So what I'm going to go ahead and do is pull up my Fibonacci projection tool, draw the length of wave A of the first leg, and project it from the low, the extreme of wave B. And you can see wave C or wave Y, it's exactly the same thing. They are virtually equal in price. So I'm doing this analysis just to give my bias more conviction. The price structure alone is extremely clear. But when you look at this Fibonacci relationship, where the third leg, let's not call it the third leg, the last leg in the correction is equal to first leg, That's a very common relationship between in corrective waves, excuse me. So the next thing that comes up to mind, so actually let me backtrack because this is about my thought process. I had a question. The question was, we've reached the bottom. Has the trend changed from down to up? This answers my question. It is a clear and resounding no. So now I've answered that question, but it leads me to another question. And this is how it is. You know, whenever you have an answer to something, there's always another question, because uncertainty is inherent in every market. There are no crystal balls. There are no sure things. There are high probability trade setups, but that's all you can really ask for. You know, you can't, you know, there's no free lunch. Okay, so the next question is, we've identified this as a three-wave move up. Now, the next thing that comes to mind is, well, this three-wave, is this the entire correction and the price has turned lower? Or is this only the first leg of a larger correction? Remember, the market's a fractal. The patterns repeat over and over again, just in different scale. So, for example, you can see here, if we look at the internal price structure of this wave here, I can probably, this is clearly a three-wave move. Maybe this is a leading diagonal. I'm doing this on the fly here, where we have 1, 2, 3, 4, 5. This completes a small wave A, small retracement in B. Then we need a 5-wave move up in C. 1, 2, 3, sideways in 4, 5. This is certainly acceptable to me. Maybe there's a different way to count this. Maybe this is a instead of a leading diagonal, maybe it's just a regular triangle where we have a sharp move up in A, sideways triangle in B, thrust up in C. It's the same thing. But this is a three-wave move that only completed the first leg of a larger three-wave move. So the same thing applies here. Is this A, B, C a larger degree wave A? And we're correcting lower in B, possibly complete. If that's the case, it implies a new high above this extreme. If the pattern is to be a flat pattern, a flat correction, where the internal count is 3, 3, 5, just like this. Well, this actually would be a zigzag, 5, 3, 5, and not to get into too deep into the different Elliott wave patterns. There's many. The point is again, the core question is this all of the correction? Well, it's certainly viable that it may be. If that's the case, what I want to see is an impulse wave to the downside. Okay, so do we have the next step is, do we have an impulse wave from this top to this low? Do we have something that resembles an impulse wave, a 5-wave move? And for those of you who are not familiar with Elliott wave, an impulse wave looks like this. This is an impulse wave when the when the trend is down, where we have 1, 2, 3, 4, 5. Just like here, starting from here, 1, 2, 3, 4, 5. That's an impulse wave. So from this top to this bottom, is that an impulse wave? It is not an impulse wave. This looks like a corrective wave to me. In fact, from this very top to this low, we have a 3-wave move down. What follows that is a 3-wave move up. So already, and actually let me take a look at this high. This high is a double top to this high. So they're definitely related. So we have a 3-wave move down, 3-wave move up. So already I'm inclined to say this is a small degree wave A, wave B, and we fell impulsively in C, increasing my conviction that this is only the first leg of a larger correction. It's too soon, it's too early to determine what the larger pattern will end up being, but we can narrow it down as price goes along and maybe possibly find a trade once we're done with the analysis. Okay, so let's add conviction to this this idea that this is an A, B, C correction. Well, what I want to look for is the same thing. Maybe not equality, because just eyeballing this, I can see that this wave C is larger in price than wave A. But maybe there's a Fibonacci relationship there. A common relationship, if you don't get equality, the next one of the next Fibonacci relationships that's common for corrections is 1.382 or 0.618. So what am I doing here? I'm doing this completely wrong. Let me backtrack. Okay, so I'm drawing this the length of wave A, then bringing it down and projecting it lower to find a relationship between wave C. It doesn't say it here, but you can see the scale here. This is the 50% retracement, this is the 61, 78, this is the 100, and this is the 1.382%. You can see that here. You know, just shy by a handful of pips. You could say, no, and not that you could say, this is wave C is 1.382 Fibonacci times the length of wave A. So what do we have here? This is wave A, and I'll subdivide that. I won't get too crazy with the subdivisions because I'm doing this on the fly. And let's do this correctly, since this is an educational video, right? Complex correction to complete wave A. Simple correction to complete wave B. Once again, 3-wave move down in A, 3-wave move up in B, impulsive wave down in C. This larger 3-wave move in turn completes wave B. Now, this is probably, you can see this is correcting higher. It's probably not a bad time to be buying this. I'm already in my mind maybe entertaining the idea, but I won't move my money just yet. But this is already, it's the analysis is working. This is calling for a higher point above the termination of wave A. So if I'm buying here, placing my stop below this swing low, that's a pretty good risk reward ratio. So the same thing that we've been doing, we're going to do again, but this time for the larger correction, if this indeed is going to be a flat correction. Flat corrections look like this in this case. You have a wave A, partial correction in wave B. Sometimes it can actually exceed wave A. In this case, it did not. So this would be wave B. And finally, we have a wave C. And the same relationship I'm looking for. I'm looking for wave C, which is somewhere up here. To be at least equal. I'm looking for the guideline of equality, the length of wave A. So what I'll do is I'll pull up my Fibonacci projection tool, draw out the length of wave A, project it from the low of wave B, and look for equality. Equality comes in at $1.30. So we're looking at 300 pips above us. Where's your stop if we're to buy immediately? Our stop is at this swing low, 75 pips lower. So you're risking 75 pips or $75 per mini lot for a gain of $300 if this is to hold. Now, what else can we do to compound this? Well, it's simple. Let's look at the daily. Pull up your SMAs. I haven't pulled up any SMAs, any momentum indicators, nothing else, only Elliott wave. Okay, so we have, you see this green line here, I believe this is my 50-day moving average, which comes in at 129.18. Shy of equality, which comes in at 130, but still we're looking at over 200 pips above us. Moreover, I can count possibly a completed impulse wave, at least from this high here, where this could be 1, 2, 3, 4, and 5. A guideline of corrections is they tend to terminate in the area of the previous fourth wave. This would be the area of the previous fourth wave. At the very least, it's consolidation. So this is resistance. So I'm going to go ahead and draw my line over here, which just so happens to coincide with this fib, 130. 130 starting to look like a contender for a potential target. That's the extreme of wave 4. But wave 4 began at this low. So this whole area here is the area of the previous fourth wave. The low of this candle here comes in at 28.58. Is that correct? Yes, 28.58. Still 150 pips above us. Even if you take, maybe this is where you want to book half of your profits, and you raise your stops for the remaining half, and you let that climb up to 130 or higher, depending on the conditions of the market. So that's basically my thought process. This I meant to do this video on Friday, but I got caught up with my nephew's birthday. But I wanted to get this out before Monday. Actually, Forex, this market's live. It's Sunday, and the market opens at 5 p.m. Eastern. So that's basically my thought process. I'm looking at, just to recap, I'm looking at the bigger picture, the daily. I see a bounce. I want to know materially, qualitatively, what this is all about. So I'll zoom in. Once I can identify that this is not this is not an impulse wave, I know the trend will eventually resume to the downside. The question is when and if this three-wave move up was only the first leg of a larger correction, or if it was the entire correction. And again, if this was to be the entire correction, well, this price needed to be more impulsive instead of corrective. It counts best as a three-wave move in A, B, C. Waves A and C are related by a Fibonacci number. This wave W and Y are related by a Fibonacci number. And so everything's leading and pointing to the fact that this is a correction, this was a correction, and we need the third and final leg higher to complete a larger degree correction. At that point, you want to short, but this correction is big enough that it makes sense to counter trend trade this. Okay? Always knowing that you're counter trend trading, and you should have a stop, you know, ideally at the previous swing low. So that's it. If you guys have any questions, hopefully this helped. This is just me rambling, trying to give you guys tips and improve your trading. If you guys have any questions or comments, you guys know where to find me, at FutureMeDead on Twitter. Good luck.